Hey everyone, welcome to Covered Call ETF Investing, your central hub for deep Covered Call ETF data. And in today's video, we're cracking open the hood of the Covered Call ETF ALLSTAR tracker, a Google sheet I've created to look at the banking landscape across Canada. Why own one bank when you can just own them all and compound it over time with high yield funds like Covered Call ETFs? So if you like what you see and you want to access this tracker for yourself, then head over to my Patreon, which will be in a link in the description below or the very first comment that you see. So at least you can explore it there for yourself. So with that being said, let's get into the video. So the next thing that I thought would be kind of interesting to look at would be basically the bank ETFs. And why, if you're someone maybe who's thinking of investing in banks, I mean, in some regards, let's just ask the question, why not just invest in all of them? I mean, there's a lot of financials here in Canada, a lot to pick from. So we're going to go through some of that and what that looks like. And a lot of these are sort of more driven, like they're more bank oriented. So you'll have things like ZWB, Beef and Bank, Call, which invests in US banks. You got European banks, and then you kind of got more of the traditional, the big six banks, BKCC, the leverage version, BKCL, HMAX, and then of course you got, where's Bankrate at the top here, which invests in the big six banks with a little bit of financial institutions. So all of these funds, for the most part, do invest in the big six Canadian banks. Some, it's just the big six. Some do have add in a little bit of life insurance and other financial service companies as well. But let's go through some of the yields and actually look at kind of, do you get better performance if you're thinking about, not sure which bank to invest in? Well, maybe just consider an ETF, like maybe a Covered Call ETF. If you're looking for something that has a higher yield, that will give you a little bit more juice from the bank sector. Because in my opinion, I think the banks and financial, I think we're gonna trade sideways for a while here with that industry here in Canada. But anyway, who knows? As always, who knows what happens? But let's go through some of the yields in regards to banks and basically financial institution style ETFs. EBNK, has the biggest one. This is the biggest change of June with a massive distribution increase of something like 143%. Crazy, pretty crazy for a really stable fund like EBNK. It probably yielded, I don't think this fund was on anyone's radar. And then all of a sudden in June it pops and it doubles its yield, goes from call it 6%, maybe 7%, all the way up to 15%. And of course there's the usual suspects bank. Where's BKCL and BKCL, the usual suspects, and HMAX. These three are probably the highest yielding, big six banks plus some life insurance and financial institutions. So usually there's about, I want to say 10 funds in total. BKCL being the only difference, it's just the big six banks, and it's equal weight in that regard. But as we kind of move down the list, we get non-leverage versions of, say, BKCL, still a great yield at 13% versus its leverage counterpart at almost 16%. You get some US banks in there as well with Call, FMAX as well. You'll get with FMAX, you'll get say Visa and other, you'll get credit card companies, which is pretty unique. Probably the only kind of fund on this list that has that. CBNK, interesting. So if you are like, I want full growth from my Covered Call, from the fund. I don't want to invest in anything that's going to drag down growth, which Covered Calls typically do on the price performance. Well, CBNK will allow for 100% growth. It has 25% leverage and writes Covered Calls on that 25% and gets you to almost 10%. So I mean, it's a unique kind of build if you think that, hey, I think the banks are going to grow over time. Like, we're going to still see growth from those. Then you could participate in all the growth and get a little bit of extra premium and yield along the way. Got some more banks in here, and then we got some like North American financial institutions here with BFIN. But I think for most of you guys are more interested in this stuff up here. So as we go through the list, what over the last 6 months has been, what are the opportunities here in the financial sphere? So over the last 6 months, its price performance has actually done surprisingly well. Yeah, I mean, I think with talks of interest rate hikes and what have you, no doubt that that's definitely had an effect. Look at EBNK over the last 6 months, performing like 12, 20% over that period of time. Let's go down to some of the bigger ones, the bigger yielding ones, I should say. So over the last 6 months, HMAX, BKCL, BKCC, Bank, those really high yielder bank ETFs, and even they have grown just a little bit. So you're not seeing total return up here. There will be columns for that come July for 6 months, 1 year, 1 month, and 1 year. Yeah, there will be total return. And I think it'll give a much greater, it will reveal in many different ways how total return can just totally amplify and maybe defy your expectations a little bit in this regard. But yeah, EBNK maybe will come down a little bit as far as its performance is with such a high yield now at 15%. Over the past year, what have we gotten over the past year? I mean, in 2023, we saw a much bigger bull market. We saw a bit of a bull market. Now, just remember, some of this performance now probably has, in some respects, due to the fact that if you're looking at the big six banks, those types of funds are kind of down here, down at the bottom, right? If it's just the big six Canadian banks, they're kind of more or less on the bottom. But these other funds hold maybe those banks and maybe more exposure to other financial institutions as well. So I think, you know what, if you're not sure which company to invest in, I think there's certainly you can certainly invest in like one of these funds, get a little bit more juice with the covered call coverage, because there are two counterparts. You can get an equal weight banks ETF and get like say a 5% yield, or a covered call equal weight banks here in Canada ETF, and you'll double your yield. And you still get, as this shows, you can still get good price performance as well out of that. That's just something to keep in mind, is that when you go higher up in yield, yes, it drags down on price. So something to be aware of in that regard. And they all kind of hover around that usual 0.65, 65 basis points. The MERs are typically a little bit higher, especially higher if you include leverage costs into that. So some of these funds, they just have they have higher maybe trading costs, custodial costs, other all-in-one costs will be found here. So if you're kind of maybe confused between these two, just look at MER. That's the most important fee cost to consider, since it holds this fee among other fees that maybe aren't as obvious. Then we got portfolio coverage for these financial institutions. Like, again, the smaller the portfolio coverage is, the more that it can potentially grow. And the higher it is, the more yield you'll get, but you'll get less price appreciation to boot. Now, if we move over, we can see that a lot of these guys have good distribution streaks. Some up into like 100 months, which is something you should keep in mind. This is all based on number of months. Covered call ETFs are more of them have come out recently in the last couple of years. Some are as old as like 13 years, 14 years, thereabouts. But those are really few and far between, but the vast majority are probably within the last few years or so. Now, how has distribute or even dividend increases, how has that gone lifetime for some of these funds? Well, lifetime, you can see here that, EB&K, well, month over month, it just went up 141%. Lifetime for BFIN, up 101%. Now, the ones you might be a little bit more interested in, because we kind of gravitate towards that, HMAX, BKCC, Bank, and BKCL, wherever that is, down 4% lifetime. That's still, you still get a great yield, even if the distribution has gone down a little bit. Bank increased it lifetime to almost 43%, and BKCC lifetime up 145%. But I think BKCC has been out since 10 years, I want to say, where it's a leverage counterpart, has only been out for maybe 8 months, something like that, maybe since October. What's the inception date of BKCL? July 5th, 2023. So there you go. Okay, and then when we go over to AUM, what kind of health of these funds are we looking at? So let's go over to Canada, flip through that, and then we'll go to financial sector. So what kind of AUM are we seeing across the board? Year-to-date change for a lot of these funds, mostly green. I think the ones that, again, what you guys will be interested in are ones like Bank, right? That has seen a lot of AUM increases over the past, especially year-to-date, as you can see here. And you see, and not 1 month has it decreased a little bit. We can see HMAX, another popular fund, green across the board, up 23% this year. Its assets under management. And let's look at maybe a fund like BKCL. I don't know why I always have such a hard time trying to find BKCL, but anyway, here it is. And once again, it's AUM growing green every single month, and is up almost 50% year to date. Anyways, if you're wondering about maybe taxes with some of these funds, how it'll affect, I do have a tab for it where we can look at just how well these funds are going to perform tax-wise. Let's go to, so you can see, so this is what is called the T3, what is that? Yeah, T3 I want to say. Your T3 tax forms for your investments. Maybe these numbers might not mean much to you, but basically each one of these categories makes up the way in which these funds pay out. Some of them pay out capital dividends, eligible dividends, foreign income, and some of these are less tax favorable than others. So return of capital being the most tax efficient, depending on your tax bracket, capital gains. I know that's about to change in a big way here in Canada, so maybe eligible dividends is a better way to go. But anyway, it's like a ladder tier. There's funds that are more tax efficient than others. Once you get into foreign income or other income, less tax efficient. So if we look at, we'll sort it by return of capital. So return of capital is the most tax efficient. You won't pay tax on any of this. There are a lot of misnomers about return of capital, but I do have other videos for that, and you can check those out as far as understanding a breakdown of like what you're looking at here. But just for argument's sake, we're looking at the most tax efficient funds based on return of capital. So essentially this would mean that only 16% maybe you would pay taxes on. So let's use HMAX as an example. 84% you're not paying tax on. What you would pay tax on is 15% of eligible dividends. That doesn't mean 15% gets taxed. It just means like even less than this would get taxed based on your potential tax bracket. If you are someone who maybe has an income of under 50 grand in a taxable account, well, the way it breaks down is you wouldn't even pay tax on even this. So again, but if we see more of the tax breakdown here in foreign income, this is just where it won't be as tax efficient for you guys as other ones. So this is going to be a really helpful tab for you. I've basically included all the T3 breakdowns from the tax year of 2023. So that'll be static for the next year until 2024 is done. And the last, I want to say the tail end of March, like the very last day of March, I believe all the T3s get released. Anyways, so if you're looking for something that's tax efficient along with investing in the banks, this is a good place to go. So hopefully you enjoyed that small snippet from the Covered Call ETF ALLSTAR tracker. There is a 2.5-hour video over on my Patreon that goes through all of June's content if you want to binge it all at once. And just remember, if you want to access the tracker for yourself, then head over to the description below, or the first comment that you see, there will be a link over to my Patreon, where you can level up your Covered Call ETF game and look for those opportunities, red flags for yourself. So with that being said, if you like what you saw, hit all the buttons of the like and subscribe variety, and I will see you all in the next video.